Hello, I'm Jeffrey Praviti, Vice Chair of the Governmental Accounting Standards Board, and I'm here to present the first in a series of 3 videos about the recently released exposure draft, accounting changes and error corrections. The goal of these videos is to help you understand the different aspects of the proposal and to give you a new way to provide input to the board via survey questions. We will start with the proposals about the categories of accounting changes and error corrections and how they are described. Subsequent videos will discuss display and disclosures. Let's start with the description of changes in accounting principle. When a government changes from one generally accepted accounting principle to another. For example, if a government changes its policy about what is treated as a cash equivalent. Importantly, the change should be justified on the basis it is preferable using the qualitative characteristics of financial reporting. The government cannot simply make a change without doing this. The next category is changes in accounting estimate, described as when an accounting estimate changes because the inputs to that estimate have changed. Inputs include data, assumptions, and measurement methodologies that are used to determine the estimates that is reported. If a change in accounting estimate results from a change in measurement methodology, for example, a change in evaluation technique that is used to measure fair value, that change also needs to be justified by the government on the basis it is preferable. The final category of accounting changes is changes to or within the financial reporting entity. These are described as when a government adds or removes a component unit or a fund, or changes the way a component unit or fund is presented. This category would cover reclassifications of funds. For example, if a government reclassifies a major fund from an enterprise fund to a special revenue fund. Another category considered in the ED is error corrections. They are described as resulting from mathematical mistakes, mistakes applying accounting principles, or incorrect usage by the government of facts that existed at the financial statement date. These proposals represent a change in current guidance that is intended to provide enhanced clarity regarding the descriptions of and interplay between each of the categories. Governments will then be able to classify these events consistently, which will provide more consistent information to users of financial statements. For example, the proposal clarifies that if an event could be classified as either a change in accounting principle or a change to or within the financial reporting entity, it should be classified as a change to or within the financial reporting entity. The board also believes that justifying that certain changes are preferable promotes consistency in a government's financial reporting year over year. Users of financial statements value information that is presented consistently by governments over time and across governments. The board has attempted to do this and would like your input as to how well they have succeeded. First, you can watch the 2 other videos in this series. Then you can consider providing input on the proposals by answering the questions in the survey or submitting a comment letter. Finally, tell us whether you thought this video was helpful in describing the proposals by sending us a note to the director's email. Thank you very much for your participation and your engagement in helping to make accounting standards better.